Good afternoon. This is Roxy Glenn, the Director of Professional Development at Metrotex, and I'd like to welcome all of you to our Casualty Loss webinar. Kristi Davis is going to be our moderator for today, and Kristi has been in real estate for many years. She's been a managing broker for Ebby Holiday, and she's currently a managing broker for Compass, and she is also the chair of our Forms and Contracts Committee. She's been currently on the board of directors, been on the board of directors at both the state and national level. She's a wealth of information, and she will be hosting our webinar today. I'm going to let her introduce you to the rest of the panelists, and I wanted to instruct everybody also, if you will type all your questions into the chat, or I'm sorry, into the question pane, we will get to those questions as we go along, and this will be recorded, and it will be sent out to all of you after the webinar. So take it away, Kristi.
All right, good afternoon. Thanks, Roxy. Today's panelists we have joining with us are Cindy Baas. Cindy's a broker owner of Baas Realty, holds several designations, is currently the Vice Chair of Professional Development, and is a Metrotex instructor. We're looking forward to hearing from you today. Next, we've got Anginette Jorrey. She is a loan officer for Fairway Mortgage with 17 plus years in the industry and prides herself in service and connecting with the agent and her clients, which are all the same, agents and her loan officers and her lenders and borrowers. She's won numerous awards and has been the past recipient of the Metrotex Affiliate of the Year Award. Thanks, Anginette, for joining us. And last but not least, we have Amanda Campbell, who is a property and casualty insurance broker with Smith Allen Insurance Company. She definitely prides herself in able to connect the right needs of her clients and customizing their insurance plans for them and priding herself in customer service and solutions oriented. So today we're going to get started. Oh my goodness, what a timely component to this casualty loss paragraph of our TREC 1-4 family contract, when we've just had this weather scenario of extended, extremely low temperatures, as well as a snowstorm, which happens maybe once a decade for us. I think the last time we had one of these events was 2011 when we were hosting the Super Bowl, and I was a recipient of a ceiling caving in and trying to figure out how to scramble and call for service providers and get things fixed. So I can certainly assure you I may lead in with some questions about how my experience related from this, but we have so many of our members that have clients out there that are facing limbo with their transactions. Is it going to close? Should it close? How am I going to know if there's damage? How does that damage get repaired? So there's lots of components of our TREC 1-4 and related addendas that relate to this weather-related incident. They include the casualty loss paragraph of the 1-4, the third-party financing addendum, which includes property approval and lender required repairs, as well as the temporary lease addendum. So we're going to tackle some of those things. But Cindy, how about we start with a little bit of you of what's your insight on paragraph 14, that casualty loss paragraph, and how do you think that relates to, oh my gosh, is the deal gonna, can I cancel? Can I terminate the contract? Where am I with this as a buyer?
Well, it specifically states what to do. So it's not a guessing game as to, what does the contract and how does it relate. So I'm going to kind of paraphrase it, but I do have it in front of me so that we can really understand what it states. And remember, we are not attorneys for the most part, so we can't interpret it, but we can read it because it basically states exactly, what our buyers can expect to do. And it does state that if the property is damaged by fire or any other cause, that the seller does have the responsibility to restore it, hopefully prior to closing. And then if not, then the buyer can back out, or the buyer can actually work it out with the seller, and get those repairs done as soon as possible. And what we're seeing right now is we have a backlog of our plumbers, specifically for our frozen pipes. So more than likely, it may not get done in time for closing. And if not, then we just need to work through it together and get that extension, stay calm during the process. But the goal is to get the buyers and the sellers to the closing table. So the buyers, our job actually is to stay calm, be the calm amongst the storm, and let our buyers know that we can get this fixed. And we just need to talk with the lenders and talk with our insurance agents and understand what their requirements are and the repairs and who's responsible for the repairs. But yes, definitely it does state that sellers are required to put the property back to its original condition when it went under contract.
Absolutely. And you said one of the words that I love to always tackle and emphasize: communication. It's so key to everything. Removing emotion and allowing each party to be communicated with and understand what their rights and remedies are in these scenarios. So Amanda, I'm going to move over to you for a moment and just talk a little bit. So during the storm, and these are kind of some twofold questions, because I'm going to adjust the question and interact with each of you as maybe the question pertains to each of your individual specialties. So it's during the storm, we were in the option period. The property has a pool. The inspector that booked for the check to come out to check the pool equipment, and for obvious reasons, and obviously that there has been damage due to freezing, but the pool company is too busy to come test the leak and to verify that the pipes weren't busted. Pool companies are very, very busy right now. The best I've gotten was about 4 weeks from now that the pool company can get there. At the time, the option period is ended after those 4 weeks. How can I protect my buyers against this problem? And the reason why I'm asking you, Amanda, this question to first is, okay, when should we be advising our buyer clients and our seller clients to reach out to the insurance company? When is the best time and protocol to bring that insurance company in? One, for the damage and or claim, but two, also maybe service providers that you have some ins with that can get to these clients sooner versus later.
Right. So this pool question I've been getting the most of out of any type of claim there is with this issue. And unfortunately, it's such a huge gray area with all of our insurance carriers, and it's a lot of pools are not covered by freezing, but equipment can be. And so we're seeing a lot of that type stuff happen. But with the pool equipment being covered, it also, in order to be filed as a claim, has to reach the deductible amount, which is what we're seeing second fold of the repairs not even reaching the deductible. So with that, you're saying like all these vendors and stuff are so backed up, which is also the other issue that we're experiencing. So what we're advising is just that you get on as many lists as possible, like call whoever you can and get on the list. And if you make any repairs yourself, keep the receipts, document the damages before, make sure to take lots of photos and videos so that you have that for whenever you do end up filing a claim or an adjuster does come out, and make note of every single person you talk to, who it was, what company, and what they tell you. Because also what we're seeing is with the entire state of Texas being affected, there's not enough manpower. So people are bringing in people from out of state, and their time will be up and they'll go back and maybe the claim or the issue isn't still fixed. So they bring in somebody else, and then it's frustrating for the client. So yeah, just make sure you're documenting everything. Hope I answered that. I know that was a lot. There was a lot of questions with that, but.
No, definitely, definitely. And I was on a call this morning with an appraiser, and he said, and Anginette, this is going to start coming to you now as our lender expert here, that as an appraiser, he had 35 emails from last night after quote unquote business hours to this morning of re-inspect appointments for appraisals. Lenders requiring a re-inspect of the property to ensure that there's no damage. So that leads me to my first question with you, Anginette, is will the lender or bank require a final or a re-inspection prior to closing?
Very good question, Kristi, and thank you for the opportunity to address some of these issues, because last week was a nightmare for a lot of people. And so everyone has questions in different scenarios. And the first thing I want to say is that each bank and lender will have their own internal expectations on what's required to be inspected, what type of inspection is going to be needed. But one of the rules that we follow is when FEMA declares an area as a disaster, then our own internal processes and procedures go into play as to whether we are going to declare things need to be re-inspected or not. And right now we're in that place where, I can speak for Fairway, that we are requiring properties to be re-inspected right now. If an appraisal has been done like within the last couple of days, in the last few days since all of the storm hit, then it may not need to be re-inspected again because it was just inspected through the process. But as a fiduciary and an advocate for the buyer, they might want to take a peek again at the property before they close.
Absolutely. Always encourage. And Cindy, this will go back to you. I'm assuming that you instruct and train either one as an instructor to our members at MetroTex or to your own brokerage. I'm certain that you definitely train that a final walkthrough for the buyer is very important prior to closing.
Exactly. There is a form for that. We have a lot of forms out there, but there is an amendment or addendum, sorry, for the buyer walkthrough final. And it's a very important, no matter if it's a disaster that had just occurred or just a regular transaction where nothing has, gone wrong. It is so super important to do that final walkthrough with that buyer and to get them to sign off on it. A lot of insurances require it. So it just needs to be a regular step in your checklist that you have for your buyers.
So that's when maybe the lender isn't requiring a final walkthrough or a re-inspect, that you are doing your due diligence as a buyer's agent and getting back out there with your client and doing a physical walk of the property prior to closing to ensure, one, that any necessary repairs that were already agreed upon, and or two, that there wasn't any damage. And Anginette, your next question that you had asked was, who orders that final inspection to satisfy the bank, and who pays for it?
Yeah, that's
so
very
I'll
good
let
question.
you address it, and then I'll come back to Cindy as well to kind of give an input there too.
Thank you. The lenders and the banks have to rep and warrant that the property, when it's delivered to the agency or the investors, is in sound, healthy, good condition, that there's no damage, there's no detriment to the new homeowner who might be moving in. So we have to rep and warrant that, or we take that back in and we don't want to hold on to properties. So with that being said, the reinspection will be requested if the lender or bank asks for one. It'll be ordered by us. The lender or the bank will make the request. Who pays for it? Well, we work for the buyer and the buyer works with us. So in that case, it would be something that maybe both parties would negotiate, because we're all a team, right? All together trying to get to closing. But as far as we're concerned, it would be the buyer picking up the cost for the reinspection because we're requiring it.
Mm-hmm. And Cindy, I'll throw that back to you. In the contract, does it specify who should pay for those fees?
So actually they're negotiable. It doesn't necessarily state, which party, and that goes back to 12B, talks about expenses that the parties incur. And so if there are certain expenses such as re-inspects, again, that can be part of a negotiated item. So definitely keep the open mind. Again, it's all about the way we present, no matter if we're a listing agent or the buyer's agent. How we present it to our client is super important. And we just have to remind them that we are trying to help get both parties to the table. So that's all in presentation.
Perfect, perfect. And then obviously we're talking about property condition and property approval, and certainly an insurance reinspect could be deemed necessary for an insurance binder to be provided to the lender. And obviously then again, going back to lender required condition and meeting standards. So Amanda, are you experiencing anything of that in regards to in order to fulfill that binder or to fulfill the insurability of a property?
Yeah, so actually just today, the majority of our carriers have issued binding restrictions, or one extra step that we have to provide proof that there was not damage to the home. If there is a home that we had closings for this week, that they provide that documentation that there weren't issues. So that's fun.
So is that having to have the insurance company, somebody there, go out and inspect, or is it something that can be visually done by a buyer's agent or a listing agent on behalf of their client?
Right, correct. Just as long as they can provide proof that there was not damage, then it's good to go.
Okay,
But if not,
perfect.
we have some questions.
Kristi, we're getting a lot of questions from the audience, so we might want to, if we got a lot. So let me throw
Let's take a break and address some of those then.
Okay, it says, my supervisor told me that casualty loss is a really great area. She once had a buyer that had broken pipes and flooding in the house that they wanted to buy, but they couldn't get this classified as casualty loss. So how is this enforceable?
So I'll kind of talk about what the contract states. So if those pipes were not broken when the contract was accepted, when the agreement was executed, then the property does need to come back to that original state. So no broken pipes at the time the agreement was executed, then there is a loss there that has to be rectified and put back. That property has to be put back, and that is stated in that casualty loss statement. For some reason, I don't know why it would not be deemed, but if the broken pipes weren't there, they need to be fixed prior to closing, according to the contract.
Okay, the next one this is from Joyce. She says, what if the carpet was ruined but the new buyer was going to replace the carpet? What option does everyone have? Does the floor have to have carpet or covering for an appraisal?
Anginette, that I think is yours.
It sounds like it's a good question for the lender. So going back to lender required repairs, for a property to close, we have to have flooring. That's going to be an item on any appraiser's list on what's acceptable and not acceptable. So going back to the question of who's going to pay for that, maybe that's misunderstanding the question, but it sounds like, number one, we're going to want flooring before we close. So whether there's carpet before or after, if it's a lender required repair, it would need to be installed before we could close.
Okay.
And Anginette, I just want to add on just a little bit too in regards to that. Those lender required repairs, that's defined in our contract, our 1-4. It's paragraph 7E, that neither party is obligated to pay for lender required repairs unless it's agreed upon in writing. And then we have also if those repairs exceed 5% of the sales price, the buyer can terminate the contract and receive a refund of their earnest money.
Thank you for that clarification, Kristi. We do have one other here, and I believe this goes back to the question about pools. Then wouldn't those pools be covered by one of the better home warranty packages?
And Cindy, I'll let you chime in too, but it depends on if there's seller coverage, if there is a home warranty in place on that property, and what that seller coverage is for that specific incident. Not all home warranties are created equally, and not all seller coverage allows for those types of things. Cindy, I'll let you chime in too, sorry.
Yeah, I completely agree. You kind of said everything I was thinking. It just, ultimately depends on what that coverage looks like if that home warranty is in place. And if for some reason, not everybody gets those seller coverages on home warranties. So if it's not in place, then it goes back again to the insurance company, and if it's covered as part of that homeowner's insurance. And then again, as Amanda was saying, not all of those expenses are equal to what the deductible is. So there's if there's a 1% or 2% deductible, but the repairs are not that much, then the seller is still going to have to pay for those. So great question.
Yeah, more. Well, there's more. Okay, so what about situations where there's no way to schedule someone to do hydrostatic testing on a pool, or it could be any repair? What if there's no way that can possibly happen before the closing date or before the end of an option period?
So that's kind of a twofold. One would be lender, because is it going to meet lender required conditions? And then Cindy, based on the contract. So both of you try to tackle that component.
Well, for the lender, and looking at it from the lender side, if there's a repair and we're going to require it to be done, if there's not enough time, it's not a reason to not get the repair done. Not that we have enough time. It would go back to teamwork and negotiating with both parties. How can the timing work to get the repair done so that they can close when everything's taken care of?
And go back to the contract, the paragraph 14 that we're talking about. And it does say that if for some reason the seller can't get it done by closing, then it can extend to 15 days. Or again, communication and seeing, how long will it take? If for some reason the buyer does not feel that that time frame is acceptable, the buyer has remedies in that paragraph. And those remedies would be to terminate, and they would get their earnest money back.
And is it also possible that if the insurance company will allow for the deductible, can they not also then take the deductible and any related costs from the insurance company and repair themselves? If one, the insurance company will allow for it, and two, the lender will allow for it. Is that accurate?
That is accurate. So if, I don't know how lenders feel about that part, so I'll let Anginette answer that. But definitely, if that is a possibility, the sellers can go ahead and say, okay, I filed the insurance claim. Here's the money that the insurance has agreed to give to me as a seller. So if the buyer wants to say, okay, we agree, get it in writing, definitely. But yes, so the seller, they can go ahead and close. The money can be given over to the buyer. That's also an insurance question as well. It doesn't stop with the lender, but the insurance company has to be able to allow that as well. So yeah, great clarification there on that paragraph.
So for the lender side, if I understand the question correctly, so I'm going to repeat what I think I heard, just to make sure I answer this right. So it has to do with who's going to do the repair, right? Whether it be the owner or a contracted individual who's licensed to do that. Each loan program has different parameters to scale as to what repairs how they need to be completed. It doesn't say who needs to do them. Like, for example, FHA has a little bit more defined requirements on what's acceptable and not acceptable and how something should look versus conventional. So I would believe that as long as, this is a very good question, I haven't had that asked before, but who can do the work? We were basically just concerned with, is the work done? Is it in good condition when it's completed? That's what's most important to us.
Perfect. And Amanda, anything to add to that as far as allowing deductibles to be paid for a buyer? The seller is going to be closing on the home, and then the buyer is going to actually utilize those funds to repair.
That I'm not sure. I just know the event happened when the seller was in the home, so the claim should be opened then, and then it's still that insurance carrier's responsibility to pay for those damages. So what happens with that check afterwards? I don't know. I have never had this, so I don't know that.
Just get it.
But yeah, I just know that it should be filed under the seller's insurance.
It just kind of goes back to the carpet question in regards to, well, buyer was going to replace the carpet, but, you know, those types of things that I know we're facing that way in regards. We have a damaged property. Buyer was already going to do some remodel to the kitchen. So do we have to make seller repair everything to the condition that it was when we contracted, when all we want to do is rip out everything? So those kind of questions come up in these types of scenarios. It opens up a little bit of Pandora's box, so to speak. Roxy, do you have any more questions before we move forward? And then I think, Anginette, I'll let you make a comment and then we'll go to Roxy.
Just one final comment regarding the carpet issue. Totally get it. I mean, you know, it's the buyer and the seller, and I don't want that darn carpet in there anyway, and I'm the new buyer. Why make them do it? Going back to each lender and bank are going to have their particulars about to the degree of scale for that reps and warrants. So maybe just ask your loan officer, hey, is this something that can be considered? Would you please check for me? Because it's every single one of us, we have to adhere to the agency and investor rules and guidelines when we deliver our loans to them. But at the same time, there can be, you know, little nuances and tweaks between each lender and bank. So just ask your loan officer if they would check for you. Is it possible?
Again, communication is key in all things.
We have one question. I'm not sure that this is across the board, it would be the same, but the cost for a reinspection or for the appraiser or whoever to go back and reinspect.
If the lender's requiring, it's the buyer.
But do you know what the cost is? They're actually asking the actual cost. Or a ballpark of what the cost would be.
Go ahead, Kristi.
For an inspector, I see that they charge typically anywhere from $75 to $150 for a reinspect fee. But Anginette, you may know better on an appraiser side of things for a cost.
I know when we request final inspections on when there's lender required repairs or there's new construction where we just have to do a look-see to make sure it's done, it can be anywhere from like $120 to $200. It depends on the appraiser that places the order because they're the ones that dictate the price on the invoice. There are parameters that each one of us lenders and banks have that our appraisers adhere to. Like, this is what we'd like our fees to be. You know, can you be an appraiser on our list and adhere to those costs and fees? So there's some control in that, but bottom line, it's the appraiser who dictates the cost. But they're usually about, I don't think I've seen one over $200, but that's on a pretty standard traditional type home. The larger the home, the bigger the repair, it may take more for that appraiser or inspector to actually do the work. So the more work, the higher the cost, I would assume.
And we have another one, just they're wanting to know how long do you think this will be that these re-inspections and things are going to have to take place before closing? I guess at what point are we going to assume that all storm damage has been repaired?
I was actually reading something from the disaster reinspection policy. So let me read it so I don't misquote anything. Just a moment, put my eyes in. So I was actually reading something about that today, that 120 days after the disaster, it could, now most things that are working right now, hopefully the work will be done in the next 30 to 60 days, right? Or a lot sooner so that people can close on their new homes. But I was reading here, it was like 120 days, I highlighted, here we go. It says, as eligible for individual assistance, individual households, and must be followed for 120 days following the incident period end date. So FEMA will actually tell us what those dates are, and they'll make the announcements, and we just have to follow those dates. It could be up to 120 days, according to this policy, unless they've adjusted it recently, but it really just depends on when they get the work done.
Our next is more of a statement than a question, but Wendy's just talking about how she's had a situation with some pipes and everything, and they've just jumped on it right away. They're negotiating with the seller, and I think that's the key. A lot of what y'all are saying about communication and just getting it out there and figuring it out. We want to know who's supposed to provide the proof that there was no damage or what does documentation look like for that? And how do you, if there has been damage, well, how do you show how much there is? What kind of people are you asking to give you these reports and things like that?
Well, I can speak to it from an appraiser standpoint. If a reinspection is ordered, there's a specific form that we have to present to our agency and investors that show we did the inspection, this is the scope of work that was done, and the property's in good shape. Costs, et cetera, that's not a part of the reinspection of the appraisal. It's important and vital to the two parties involved, the buyer and the seller, but it's not necessarily noted on the inspection form. Did I answer that?
Yeah, Cindy, go ahead.
Yeah, I was just gonna say, you know, as long as there are receipts that you provide, that's the important part about it. So if the, you know, reinspect does require something to be fixed. I just had an appraiser go out at one of my listings this morning and immediately texted me and said that there is a broken pipe, there's water flowing. So my client, who's the seller, is gonna, you know, have a plumber get out there, and then we're gonna have to, you know, send that receipt to the buyer's agent and let the appraiser know, so that they, I don't know if they're going to cause a reinspect again or not. I would assume, I'm assuming they will, unless they yell out pictures for that. But we also have to keep in mind, it's not just the broken pipes in our situation that we're going through right now, but anything that is damaged because of those broken pipes. So any sheetrock or wood or flooring, you know, thankfully this is in a garage, so we're not having to worry about hardwood floors or carpet in that aspect of it. But we have to make sure that there's not going to be any mold on our sheetrock, and the wood is not going to warp. So it's going to be, you know, I would say that it's on the seller to prove that the repairs are done, and that's by providing the receipts.
And you will see sometimes where an underwriter who looks at and checks off the final inspection report for a property so that we can get, you know, the final loan approval again in some cases, they may ask for receipts. Not all do. I know that I just had one close and there was no damage, and they allowed the one of the realtors to go out there and take pictures of the property externally and internally to show there was no leakage, no damage, no anything. And we just put those in the loan file and they were accepted. So it depends on the scenario. It's not cut and dry for every single situation.
Amanda, here's one that I think it's talking about in the future. Would the freeze be considered a catastrophic event? And they had heard that if it is, does that go against you on your insurance for the future?
Yeah, so the freeze can be a catastrophic event, but the damages from the water, that will affect the insurance. So it's different from, like, say, a hailstorm or a tornado storm, where the homeowner cannot control the damages from that. Like, their home is just vulnerable to the damages. But we're freezing and the water damage happens. The water damage can be prevented by turning off the water. So those damages will affect your clue report, your insurance score, or your insurance premiums down the road, unfortunately. Does that make sense?
Yes.
Okay.
I don't think that's what they wanted to hear, but it does make sense.
Yeah, I know.
Does it ever, I have a quick question, just probably a personal one, but in that situation, is it something that can drop off or go away after a period of time, or does it always stick with the property?
Yeah, so the claims stay on your clue report for 5 years, and then once the 5 years are up, then they're off from the clue report. So then they don't affect the premiums after that.
Oh, that's good.
It's good to know.
Yeah. Mm-hmm.
We have another one, and Kristi, I think you probably want to address this one it says, what if a seller wants to cash out for the damages from insurance but doesn't want to make the repairs? Can they just lower sales price, make repairs on broken pipes or whatever?
So the seller wants to not make repairs and
Right.
lower the price of the home, but fix the broken pipe.
Yeah, fix a broken pipe, not, they want to cash out for the insurance. And I think that's on the seller's disclosure, isn't it?
It is. If you've taken an insurance claim, if you've been paid for an insurance claim and not done the repair for that. And it does have a detrimental effect for the buyer, because then that buyer cannot go back and claim that damage, and it does wreak havoc for the buyer client. If there wasn't a lender involved, if there wasn't a insurance company involved, and maybe buyer and seller wanted to agree to something unusual like that, that might happen. But when a lender's involved and a insurance company is involved, and there is a seller's disclosure, which you are required to fill out per the property code. And I would encourage you that all of your sellers, if they have experienced damage, they need to update their seller's disclosure at this point in time. That's very important right now. Even if they're under contract, they need to update that seller's disclosure, and they need to submit that their known damage to their buyer client, their buyer that's involved in this transaction. That's a definite must. So I would say no, that's probably not going to be a feasible scenario. But Cindy, as also as a broker owner, anything you want to add into there as well?
I completely agree, because you have to disclose. I mean, that's kind of, I don't want to say that it sounds shady, but it really does. The seller is not going by the four corners of the contract, basically. And that, to me, it's almost a non-performance, of contract, and that seller will be in default. And we know what happens if there's a defaulting party. So stick to the four corners of the contract, go back and read the contract, and it tells the seller what they have to do. Yeah. So,
seller has very few backouts in our contracts. And that was one of the questions I think that, Roxy, we had originally is, can the seller back out now?
Yeah.
Great. Here's a comment from an appraiser. Brian's an appraiser, and he's on here. And he says the 1004D is not designed to certify property condition. He suggests using the disaster appraisal inspection report. So that's straight from one of our appraisers.
And that's what they're calling it, actually. That's what the inspector or the appraiser that went back out to our listing called it, a disaster inspection.
Okay.
Exactly. And the appraiser that will go back out and take a peek at it, they know what you're asking for. So they'll use the appropriate forms.
And then we have one here, and I know, Cindy, we had this question on here already. If a seller is doing a lease back after closing via a seller's temporary residential lease, is the seller responsible for repairing broken pipes, or is the new owner? At what point does the damage become casualty loss?
So great question. And if you go back and refer to the temporary lease, on page 2, page 1, how appropriate, paragraph 14, there's kind of a collation maybe there, but it talks about the repairs and maintenance. And so it states, except as otherwise provided in the lease, tenant shall bear all expenses of repairing and maintaining the property. So we have to be very careful with these temporary leases. I know Amanda's probably going, la, 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 I don't want to hear this, but because our sellers are not getting any renter's insurance normally because they're moving out, right? And the buyer's not in there. So it's one of those areas that, the lease says it's the tenant's responsibility. So from an insurance standpoint, Amanda may want to talk about this one as well. I mean, it's a sticky situation when it comes to insurance.
It is.
Temporary leases, it's kind of scary.
Yeah, and carriers don't love temporary leases. But I encourage all of my buyers who have a home that they're doing a lease back to make sure that the sellers are getting a renter's policy. So at least their things are covered and the buyer's not responsible for their personal property at least. But as far as the home, I mean, the buyer is the one who has the policy at this point, and they're the one insuring the home. So from an insurance point, I would believe that it would fall under the buyer because they're the one with the policy. But I don't know contracts for real estate. So that's from my end.
Well, I agree. I understand exactly what you're saying because they have the structural coverage on there. So, but according to, according to our contract, it does say the tenant is responsible for it. So it's communication. I know Kristi and I keep going back to communication, but that's the bottom line in all of this is communicating and getting the parties to understand that we are still trying to facilitate as realtors to get them to where they need to go. So I think that would be the, yes, go back to the contract, see what the contract says, and then work from there on the situation.
We have a lot of questions here, but I'm kind of picking and choosing, and I do want to let everybody know if we are not able to get to all your questions, we will try to get answers from experts and try to get this sent back out to everybody. There are like some of them that are still up in the air as to what's going to happen, but on a cash deal, can a buyer require the seller's insurance info for any related issues that may show up after the move-in? So Amanda, once the deal is closed, the cash deal is closed, does the prior owner's insurance have any responsibility?
No, it would be the buyers at this point, but the casualty date is before they owned it. So therefore there's a discrepancy if it's covered since it was previously.
And there is a paragraph talking about that in our contract too, representation, that just because a seller and a buyer are closed and funded, it doesn't relieve the seller of disclosing any defects. So go back to the contract.
Yeah, I would encourage the buyer to obtain any evidence from the seller of any repairs or anything that they did from this, so that the buyer has a copy of that to prove to their insurance that it was repaired or was filed or was this. Yeah.
I'm going to turn it back over to Kristi now. She had some questions that had been sent in previously, so we'll get to some of those and then we'll try to get back to some of these others that you guys are asking.
All right. So again, it goes back to the buyer. Do I have to continue with the purchase of this home since it had broken pipes and was flooded, or whatever that full loss was? And I know that we somewhat addressed it, but I thought we might just go back again, Cindy, and where in the contract does it state buyer has those options? And then Anginette, I'll come to you, and as a lender, what would your requirement be? Just to reiterate that, because that was a question asked multiple times.
Mm-hmm. Exactly. So I'm going to read what the paragraph states again regarding that. So it says that if any part of the property is damaged or destroyed by fire or other casualty after the effective date of this contract, seller shall restore the property to its previous condition as soon as reasonably possible, but in any event by closing date. If the seller fails to do so, to factors beyond the seller's control, buyer may A, terminate this contract and receive the earnest money, and B, extend the time for performance up to 15 days of the close date and will be extended as necessary, or C, accept the property in its damaged condition with assignment of insurance proceeds if permitted by seller's insurance carrier. So it specifically states that if the seller does not perform, basically, that yes, the buyer can terminate.
Perfect. And it gives an option to extend up to 15 days. So I know that's another question. Should I be extending my closing? Should I be extending my option period? How should I counsel my client in regards to that? So Cindy, if you'll touch on that first, and then I want to roll back to Anginette in regards to lender required.
So perfect, yeah. So definitely we have to have those conversations with our buyers, and ultimately it's our buyers' choice on what they want to do. Do they want to extend it? Can they extend it? They need to go back talk with the lender, because we know that their rate locks are only good for so many days. So is it, feasible for them to extend it? And ultimately it's their decision. Do we want to give, go by the paragraph and give that seller the extended 15 days? What is that going to look like for the buyer? So it is not our decision as agents. It is our responsibility to help them understand, the whole process of if they extend, what that looks like. But ultimately, it is their decision on whether they do extend it or terminate.
Okay.
And as the lender, we also now help them navigate what it takes to extend. The choice is theirs. Do they want to move forward? Do they want to extend? And we as a lender or bank explain to them what the processes and steps are to extend a lock. And with extending a lock, there's usually a cost and fee involved, and what the cost and fee will be. And that is basically between the lender and the buyer. So if the buyer chooses to extend and there is a fee, then they're responsible for paying that as well.
Okay. And that goes back to our contracts. It's one, it can be negotiable if there were some seller paid concessions for the buyer and closing costs. And then it also does state in paragraph 12 that final compliance inspection, repair inspections, and expenses indicated to any loan are expenses payable by the buyer. So it is written in our contract that those are normally the buyer's fees.
Mm-hmm. Exactly. But they can be negotiated. So, and that's a good thing. Communication.
Everything's negotiable.
That is just my favorite word, is communication.
100%. Amanda, I know we touched on this a moment ago, but there were a couple of questions in regards to clue reports. And will this water claim affect my clue report? How will it affect insurability today and then moving forward?
Yeah, so like I mentioned, the water claim does affect the insurance reports because it is an event that could have been avoided, whereas weather claims aren't. But one thing that is hopeful for the buyers, so if they are purchasing a home and like a water claim comes up on the clue report and it was from the previous owner, that can be excluded on their insurance because it was the previous owner's claim. So that's why if the buyer, then it's on the seller's clue report. So yeah.
Okay. Perfect. And this one, the seller cannot afford the deductible on their property insurance. Or worst case scenario, I'm not sure what this term means. There's no useful insurance. How can the buyer and seller handle this situation?
So I'll hit it from the contract side of it. The other two can hit it from their point. But as far as, there's the negotiations of possibly having the repairs done, maybe escrowing out and having the proceeds pay for the insurance. But again, depending on the lender and what their requirements are, that is something that will dictate how that looks. But that is a possibility sometimes. Or another good thing is that sometimes some of our handyman or our professional technicians, they will take a payment at closing time from the proceeds as long as they know that there are proceeds. So that's another relationship that's important to have with the repairmen that and can offer over to your clients. And so that's a possibility as well, is trying to get the repairs done so that we can get to closing, and getting it paid at closing may be an option for the seller at that point.
Mm-hmm. And my advice would have the seller or your client assess the damages and see even if it is something that is worth filing a claim for, because yes, you do have to hit that deductible, but I've had a lot of clients where the water damage is coming into their garage, and so garage floors are a lot different than hardwoods or tiles. So the damages might not be as extensive as you think. So you can just repair them yourselves. Also, just a plug for insurance information. Make sure we see this all the time where clients just want the lowest premium possible, so they want to jack up their deductibles to get the lower premium. And it saves you maybe a couple $100s, but then you're out thousands more if you did have a claim like this. So I do it on my end, but I use realtors and lenders advise your clients as well to not go with the highest deductible. That's my advice.
And each lender and bank will have their particulars on whether they'll let something be paid at closing or not. So you just have to go back and have communication with your lender. Is this something that can be done?
Right. And Cindy, you said something too about escrowing funds for repairs afterwards. Some of our title companies will and will not allow for escrowing of funds like that. So again, communication, what's going to be best for your buyer and seller client. The ultimate goal is buyer wants to buy the property and seller wants to sell the property. How can we communicate and work together to ensure that we're getting this deal completed in a timely fashion and the best fashion that protects both parties?
And the lenders are similar. Some title companies you mentioned, Kristi, will and won't handle escrow holdbacks. And some lenders and banks, they have some will and some won't. Escrow holdbacks used to be really big way back when. And they'd set money aside for not major construction or structural repairs, but like more cosmetic type things, painting or, you know, more easy repairs. But you'll find it a little bit more difficult and challenging right now for a lender or a bank to do that. But still ask the question.
Definitely. Roxy, we're about 10 minutes to the hour. Do we have any questions online that have been included that you want to ask at this point for us?
We do, and I do want to one more time, Cindy stressed this at the beginning, but because of some of the comments, I want to stress that no one here is giving legal advice. As you can see, many things are still negotiable. Many things depend on the lender, on the insurance carrier, and things like that. So no legal advice is being given here. This is a format for y'all to hear from the experts as to what their policies are, and for Cindy to give you and Kristi to give you clarity on what the contract states. Okay, is there anything in place in the contract to force the seller to provide an updated seller's disclosure?
So according to, I'm trying to think, the Texas property codes, it does require any time that a seller becomes aware of a defect on their property or something takes place that malfunctions or breaks, they are required to update it. And Kristi, help me on doesn't even the seller's disclosure states that we need to update it as well. So.
Yeah.
Yes.
And again, in the contract, it states that the seller will convey the property in the condition as it was at time of contract. So therefore, if something has changed, it is a requirement, unless otherwise agreed in writing, that the seller is to provide that property in that condition.
And I always go back to the paragraph about representation too. So that seller is not off the hook when it closes in funds. And so if they fail to disclose a defect, the buyer can go back to them as well as the agents. So let's be careful on that as agents. If we know about something, again, disclose it. It's our responsibility to disclose. That's talked about in our articles.
Absolutely. And Roxy, you stressed that none of us were giving legal advice. We are not attorneys. However, the Texas Realtors Legal Hotline is available to take your calls, and you can ask specific questions pertaining to your situation with your buyer and seller clients. They will return your call or answer your call and answer your questions. Great resource out there. Go back to your brokers, your managing brokers, your brokers of records, your sales managers. Ask them questions. Don't take on any of this blindly and by yourself. Reach out to get assistance. And then also, Texas Realtors submitted some information that there also is is a hotline for the Texas Bar of Texas, and they have a hotline. So if your client has some legal questions, the Texas Bar Association has a legal hotline that they will answer questions for your clients directly. So lots of resources out there. Again, key is certainly communication and interacting with one another best and representing your client to the best of your abilities.
Okay, the next one
Roxy?
we have, what is the real estate definition of casualty loss? This is a multi-part question. It says, what is considered a casualty loss? Who determines if something's a casualty loss, the buyer or the seller? Is it an insurance claim required to call something casualty loss? And we had a previous question that said, is this the same as a tornado or as a flood or as a hurricane? So, Amanda, you might be the best one to tell us what a casualty loss is.
Yeah, anything, I guess, that happens unexpected to your home, or even your auto, but we're not talking auto, but your home, would be considered a casualty loss. So a lot of our policies are all perils policies, and so that's anything that happens to your home that is unexpected. So that covers everything except for flood, earthquake, and terrorism, which those are unexpected as well, but those are not covered in your insurance policies. So the majority of policies that we have are all perils, so that would be considered casualty from our end.
Okay. Here's another one. Does providing an inspection report with a seller's disclosure notice satisfy the seller's duty to disclose property condition? For example, if they leave it off the seller's disclosure notice, but is stated on the inspection report that's attached.
Cindy, I'll let you tackle that question first.
All right, so according to the seller's disclosure, it asks specific questions on there. So the sellers need to answer those questions specifically. And then there is a place on there that if there's a home inspection that's been done in the last 4 years, we have to state all that information that's in that little grid there and attach it. And so saying, you know, please see the attachment, I would say my policies and procedures would state that that is not sufficient to say see attached. We need to spell it out because there are certain questions on all of the seller's disclosures that pertain to just about every single item that's on the seller's disclosure is going to be addressed in the, on the property inspection will be addressed in the seller's disclosure. So those sellers need to go back and address it.
Okay, and I wanted to remind everyone, we are getting close to the end of the webinar. I want to give everybody on the panel a chance to give us some final words before we finish. But I do want to let all of you know that are on here, every other Thursday we do something called Real Talk, and it's a Facebook Live event at 5:30 on Thursday evenings on our MetroTex Facebook page. And we will be attacking this subject again this Thursday. We're going to have some additional panelists and people speaking to you. We'll actually have a title company there as well. So we're going to continue until we get through all this. As long as there's questions and there's things we can help you with, we will continue doing Facebooks and Facebook Lives and webinars and things to help you get these questions answered. But I want to first off thank the panel for being here today and turn it back over to them for any final words they might have.
Ladies, thank you so much. A wealth of information and knowledge, and I think we got through quite a few of the questions and imparted some advice and wisdom and some direction for people. Amanda, do you have any parting things you'd like to share?
Yeah, I just wanted to say, I know a lot of it is kind of gray areas with this. Texas doesn't experience freeze claims that often. And so I am on the phone with carriers a lot these days asking these questions and like how things are covered. And if you have any questions, I'm happy to dig into that for you. I don't know if our information is included with this, but I'm happy, or if you want to reach out to Roxy, I'm happy to look into that for you guys, whatever questions you have. Yeah, so I'll dig it up for you.
Thanks, Amanda. Anginette?
Hi, thank you guys. It was fun to be a part of the conversation today, and that's the big key word for today's conversation. I enjoy answering questions related to financing on our residential properties. So if you have any others that we didn't talk about today or you think of later, oh, I wish I'd asked, please reach out to us or for myself or financing. I am not a licensed attorney, so most of What I speak to is regulatory and my own opinion, and just basically roles and tasks as they apply to underwriting approval. So just make sure that you have a great lender or friend to talk to.
Perfect. Thanks, Anginette. And Cindy, let's you wrap us up.
Well, thank you so much. It has been a pleasure, and it has been fun, as Anginette said, talking about this. It's not a fun topic, but having everybody here to discuss it is just been a great time. Also, just understand that due to what has happened and being under contract, there's going to be a ton of negotiations, and we do need to get our clients back to the contract, see what the contract states about it. If they cannot come to any agreements, then definitely refer them to an attorney, because we are not licensed attorneys. But communication is the key to everything. We as agents need to be the calm in the storm and just get them to talk it through and get to the closing table if that is what our clients want to do. And obviously it is, because that's what they hired us to do and help them with. So yeah, reach out to us. We will be glad to help you guys if you have any additional questions, to the best of our abilities.
Thank you so much again, and everyone that has joined us this afternoon. We appreciate your time and for being an avid audience and a participating audience with your questions. We look forward to continuing to bring you great information with Metro Texas Association of Realtors, and thank you again for your time.